how are you successfully investing in, say, Kansas City, or you said Ohio, right? Like the, the out of state properties that you have, how are you approaching, like, hey, this is the market I want to go in, and this is how I'm going to acquire it. This is how I'm going to manage it. How are you approaching that?
Sure, sure. That's a great question, Chris. And I think it's really important for everybody to understand that when you're going into a market, you have to understand the market fundamentals first. Before you call the agent, before you call your property manager, before you call your lender, before you find somebody who's maybe a potential partner, I think you really want to understand the economics of, what's driving the economy in that area. Because you and I both know, Chris, somebody could send you a deal in your inbox and you're looking at it and it's like, oh, it's 50K. That's amazing. Well, there's probably a reason it's 50K. I always say you get what you pay for, right? So you got to really understand the market drivers and the fundamentals before you go invest somewhere. There are questions you want to ask yourself, such as, is this a landlord friendly state or city, right? If I'm going to have a problem with a tenant I have, whether I own a 200 unit apartment complex or I'm just buying a single family house, you want to make sure you understand the laws and the rules there. You also want to understand things like population growth and job growth in that market. You want to make sure that you have to always begin with the end in mind. So even if you're a buy and hold investor and you plan on holding a property for 10, 20, 30 years, you have to really think about your exit at the end of the day. And the question you have to ask yourself is this going to be an attractive asset? Again, whether it's single family or a big apartment complex, when I decide to sell, if the market doesn't have great fundamentals, if it doesn't have the economic drivers that you want to see, it might not have a lot of buyers, which means you might buy it really cheap, but you also might have to sell it really cheap. So there's a lot of questions you definitely want to make sure you ask. So those are sort of where we start. And then after that, just to kind of piggyback on what Sarah just said, we really emphasize on building a strong team before we go knocking on doors, so to speak.
Yeah, going back to that $50,000 property, and the value is subjective. So today in Detroit, maybe you can get a good deal. And I don't know anything about Detroit today, but I remember back in like 2011, like you couldn't even give properties away
Oh
for, it
yeah,
was like 10,000. Like it was,
sure.
and it was in some otherwise, I guess, okay areas that had just been. I mean, they were ghost towns. So knowing the fundamentals of your market, but population growth. So as you've explored some of these markets, for folks that are considering investing out of state, if you're in California, prices are probably quite a bit higher than some other markets. Same thing with New York. They're definitely higher.
Sure.
What markets are you seeing as attractive for the landlord or the passive type of investor that's looking to invest out of state?
Sure, sure. That's a great question. I mean, there's a lot of landlord-friendly states. You can literally go on Google and type in landlord-friendly states, and there'll be like a Google image, and they're kind of color-coded, so that makes it nice and easy.
And
But just
Texas will
some,
be one of the big shining ones on there, right?
yeah, that's what I was about to say. But the big obvious ones that are the elephant in the room. Texas is obviously a phenomenal state. We have very, I wouldn't call it easy, but our processes for eviction are not that complicated. 30 days or less, give or take. There's a lot of other landlord-friendly states. Most of them kind of reside in the southeast. You're looking at your Tennessees, you're looking at your Carolinas. Oklahoma City is getting pretty popular from a real estate investing market. Kansas City is another one. Usually, just kind of the rule of thumb, and it's not stuck, but the East Coast and the West Coast, especially the farther north you get, those are going to be not landlord-friendly. So the states like you mentioned, California and New York, those are the ones that you definitely want to be careful. It doesn't mean you can't find investment opportunities there, but you definitely got to know what you're getting into.
Yeah, the fundamentals are going to be a lot more different if you're buying in Boston
Sure.
or New York than Atlanta,
Hmm.
Tampa,
Yep.
Houston.
Yep.